When you're in your 20s or 30s, it's easy to get caught up in the day-to-day grind of life. However, investing your money wisely at a young age can set you up for financial success in the future. Just starting out in your career or have been working for a few years, there are a variety of assets that you can invest in to help secure your financial future. In this post, we'll take a closer look at the 10 best assets to invest in when you're in your 20s or 30s, so that you can make the most of your money and achieve your long-term financial goals. 1. Real estate. Investing in real estate can be a smart decision in your 20s and 30s. Owning property can provide a source of rental income and long-term capital appreciation. One way to start is to purchase a rental property and have tenants pay off the mortgage. This can build equity in the property over time, creating a valuable asset for the future. Additionally, purchasing your own home can be a smart investment, as mortgage payments can be less than renting, and home values can appreciate over time. It's important to do your research and invest in properties in growing areas to ensure a profitable return on your investment. 2. Stock market. One of the most popular and well-known investments is the stock market. Investing in the stock market involves buying shares in companies that are publicly traded. The value of these shares can increase or decrease depending on the company's performance and overall market conditions. While investing in the stock market can be risky, it can also offer significant returns over time. Many people choose to invest in mutual funds or exchange-traded funds to diversify their portfolio and reduce risk. It's important to do your research and choose investments that align with your financial goals and risk tolerance. 3. Bonds. Bonds are a type of investment that involves loaning money to a company or government entity in exchange for regular interest payments. They are generally considered to be lower risk than stocks, but also offer lower potential returns. There are several types of bonds, including government bonds, municipal bonds, and corporate bonds. Government bonds are typically the safest option, as they are backed by the full faith and credit of the government issuing them. Municipal bonds are issued by state and local governments, while corporate bonds are issued by companies. Bonds can be a good option for those looking for a more conservative investment, or for those nearing retirement age who want to protect their savings. However, it's important to carefully research the creditworthiness of the issuer before investing in bonds. 4. Commodities. Commodities refer to raw materials that can be bought and sold. Investing in commodities can be a great way to diversify your portfolio and hedge against inflation. Popular commodities include gold, silver, oil, and agricultural products such as corn or wheat. One of the benefits of investing in commodities is that they can be accessed through exchange-traded funds, which offer diversification and lower transaction costs. However, it's important to remember that investing in commodities can be risky and volatile. Before investing in any commodities, it's important to do your research and understand the market and its trends. 5. Investment funds. Investment funds are a great way to diversify your portfolio and spread your risk. There are a wide variety of investment funds available, each with their own unique characteristics and potential for returns. These can include mutual funds, index funds, exchange-traded funds, and hedge funds. Mutual funds are one of the most popular types of investment funds. They are professionally managed and invest in a diversified portfolio of stocks, bonds, and other securities. Index funds are a type of mutual fund that tracks a specific stock index, such as the S&P 500. ETFs are similar to index funds, but can be traded like a stock on the stock market. Hedge funds are generally reserved for accredited investors due to their high-risk nature. They are typically managed by experienced investment professionals and may invest in a wide range of assets, including derivatives and commodities. Investment funds offer a convenient and accessible way to invest in a diversified portfolio without needing to research and purchase individual stocks or bonds. Be sure to do your research and consider your goals and risk tolerance before investing in any type of investment fund. 6. Savings accounts. Savings accounts are a classic investment for good reason. They're simple, safe, and easy to manage. They offer a stable return on your money, albeit a relatively small one. Typically, savings accounts have lower interest rates than other investment options. However, they are a low-risk way to save money, as they are insured by the Federal Deposit Insurance Corporation or the National Credit Union Administration up to $250,000. They're also great for short-term goals or emergency funds since you can withdraw your money easily. When choosing a savings account, make sure to compare interest rates, fees, and other terms and conditions. Consider an online savings account, which often offers higher interest rates than traditional banks. 7. Certificates of deposit, also known as CDs, are a low-risk investment option that offer guaranteed returns. These investment vehicles typically have a fixed term, which can range from a few months to several years, and they come with a fixed interest rate. CDs are a great option for those who want to earn interest on their money without exposing themselves to significant risk. However, keep in mind that CDs generally offer lower returns than other investment options such as stocks and real estate. If you're looking for a safe, reliable investment option with predictable returns, a CD may be a good choice for you. 8. 401k or 403b. A 401k or 403b plan is an employer-sponsored retirement savings account that allows you to contribute pre-tax income towards your retirement. These plans are a great way to save for retirement, especially if your employer offers matching contributions. The contribution limits for 2021 are $19,500 for both 401k and 403b plans, with an additional catch-up contribution of $6,500 for those over the age of 50. It's important to consider the investment options within your plan and choose investments that align with your long-term retirement goals. Additionally, consider the fees associated with the plan and make sure they are reasonable. 9. Roth IRA. A Roth IRA is a retirement savings account that allows you to save after tax dollars and enjoy tax-free withdrawals in retirement. This type of account is especially beneficial for young investors because they have more time for their contributions to grow tax-free. Plus, if you expect your tax rate to be higher in retirement, a Roth IRA makes more sense than a traditional IRA. You can contribute up to $6,000 a year, or $7,000 if you're over 50. And the money can be invested in a wide range of options. Consider opening a Roth IRA as soon as you start earning income to take full advantage of its benefits. 10. SEP IRA. A simplified employee pension IRA is an investment option available to self-employed individuals and small business owners. Contributions made to a SEP IRA are tax-deductible, making it an attractive option for those looking to lower their tax liability while saving for retirement. The maximum contribution limit for a SEP IRA is much higher than that of a traditional IRA, with the current limit at $58,000 or 25% of your compensation, whichever is less. SEP IRAs also offer flexibility in terms of who can contribute, allowing employers to make contributions on behalf of their employees. Overall, a SEP IRA can be a powerful tool for building a secure retirement fund. Conclusion: investing in your 20s and 30s is a smart decision as it helps secure your financial future. With so many investment options available, it's essential to choose assets that align with your goals, risk tolerance, and financial situation. While there are no guarantees when it comes to investments, diversification can minimize the risks and maximize the returns. Investing in real estate, the stock market, bonds, commodities, investment funds, savings accounts, certificates of deposit, 401k or 403b, Roth IRA, and SEP IRA are some of the best options for young investors. By starting early and staying disciplined, you can create a solid financial foundation that will benefit you in the long run. Remember, the key to successful investing is to remain patient, informed, and open-minded. With time, your investments will grow, and your financial freedom will become a reality.